So I'm attracted both to precious metals and to precious metals equities, although some patience will be required. I'm attracted too to industrial materials, although I suspect that the next year will be challenging in the industrial materials market. I don't think a Chinese rebound has happened anywhere near as quickly as people would have preferred. And I think that you are seeing the delayed punch to the economy affected by higher interest rates, as well as caution in continental Europe as a consequence of war, and newly established caution around the disputes in Israel and Palestine. I believe longer term, however, that the market for industrial materials will return and will return in spades.
As the founder and CEO of RickRule Investment Media, RickRule is a renowned figure in finance and investments. RickRule sees precious metals as an inflation hedge due to economic policies and advises patience when considering precious metals equities. After a waterfall decline into the first week of October, the gold price has been on an unstoppable move higher when war fears entered the marketplace last week. Despite the U.S. 10-year bond yield rising to 5%, the safe haven metal has risen from $1,825 just 2 weeks ago to move closer to the key $2,000 level as I type this column, notching up an impressive gain of 9% so far this month. Meanwhile, he shows interest in silver stocks, especially when they're unpopular in the market, and is actively exploring this investment opportunity. So far this year, silver has lost 5.7% of its value. Silver prices have ranged from a low of $19.83 per ounce to a high of $26.44 per ounce so far this year. Prices have averaged at $23.47 per ounce year to date. According to Investors Observer, a rating of 78 puts Endeavour Silver Corporation, EXK, near the top of the other precious metals and mining industry. Endeavour Silver Corporation's score of 78 means it scores higher than 78% of stocks in the industry. RickRule highlights the strong uranium market and predicts a challenging year for industrial materials, yet remains optimistic about their long-term recovery. Uranium prices have surged to 12-year highs, driven by supply disruptions and rising demand. The global uranium mining market is expected to reach US $11,388.3 million by 2030, with an annual growth rate of more than 5%. The uranium mining market is estimated to be 53.0 thousand tons, KT, in 2023. Furthermore, he anticipates the Battle Bank's distinctive mix of deposit products and secured loans using precious metals will offer customers a valuable advantage in the financial sector. Now, we present the clips of RickRule's insights from his recent interview with Commodity Culture. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Rising caution. I'm attempting to place capital. I note that the last time we visited, we spent a substantial time talking about uranium. And I said that we would pass into uranium bull market when the pace of Japanese restarts accelerated. That happened, and we're in a uranium bull market. Uranium is outperforming other commodities. I would use this not so much as an I told you so, but rather to reacquaint your audience with the fact that commodities that are out of favor are the commodities that you buy. One really, truly hated commodity right now, one that's disappointed investors for at least 3 years, is silver. So I'm starting to look for silver stocks. I like them when nobody else loves them. That isn't to say that you exit the uranium stocks yet. I think that uranium has at least a year to go in a bull market. If you're there, be right, sit tight. If you're not there, if you're coming into the space, you need to exercise some caution now. It's not a no-brainer, like it was the last time you and I talked. As to the broader question around commodities, I continue to be attracted to precious metals because I believe that the policy response, an economic malaise, is highly inflationary. I see government deficits everywhere, even as I see it being more difficult to service those deficits with higher interest rates. I think the way around the political promises that have been made is to inflate away the net present value of the government's obligations, which is to say inflation. I saw it happen early in my career in the 70s, and I think I'm going to see it happen again by saying there's no way in the world that I can compete with the big banks. But there's also no way in the world the big banks can compete with me. What is for them a crumb is for me a banquet. Beginning in 1998, I backed a group of people at a bank called Everbank. We started it from scratch. It was one of the first online banks in the United States. We grew the bank for 14 years, from zero to $28 billion in deposits, and then sold it to TIAA CREF. They didn't need the innovative deposit products that we created because they had 1.5 million of their own members that they wanted to service. So the consequence of that, although the bank was a good investment for them, they left behind the 250,000 customers that we had attracted to Everbank. I'm backing the same team now to, in effect, recreate a better Everbank called Battle Bank. The things that set us apart from the big banks that dominate the investment scene, particularly in Canada, but also in the United States, is that we won't have a plethora of deposit products, many of which, by the way, don't pay you interest. We'll have one checkings and savings account, a high yield money market fund. If you want to write checks on it, God bless. If you don't, no problem. We will also have money market accounts and CDs available in 22 currencies, just like we did at Everbank. If you're a Canadian businessman and you need to maintain deposits in Canadian dollars and US dollars, and you need to exchange between the two, we will do that for you, and we will do it for you cheaply. That was the primary ingredient in the success of Everbank, innovative deposit products, treating the customers well. What we're going to do differently this time is on the lending side of the balance sheet, the asset side of the balance sheet, we've identified a wonderful market niche that the big banks don't know exists. That's gold. If you hold gold in a segregated account, we will loan you money against your gold. Let's say you own $1 million worth of gold. You need $500,000 in liquidity as a down payment on a duplex or something like that. We will give you a credit line secured by your gold so that you can access the equity you have in your gold without having to sell your gold or silver. There are literally billions of dollars owned in Canadian and American accounts, segregated accounts in physical precious metals, gold, silver, platinum, and palladium. And if you have that in your own portfolio and you want access to the liquidity, whether or not you use it, Battle Bank will be for you.
Gold trading above $10,000 and silver near $300 is where President of Financial Sense Wealth Management, James Puplava, sees prices later this decade, according to his big picture update titled Unsustainable. During the interview, RickRule talked about the difficulties of starting a new bank but expressed confidence in Battle Bank's substantial size to overcome challenges. He also observed larger banks exiting the oil and gas lending sector, providing a unique opportunity for Battle Bank to step in. ING added new 2030 midstream and downstream portfolio decarbonization targets for the oil and gas sector in its 2023 climate report to an existing upstream target, along with other changes, including sector transition plans detailing client and portfolio actions that the bank intends to take to reach net zero emissions. Let's get back to the interview.
Regulations around establishing a bank are often regulations that favor the incumbent. It would be very difficult these days to establish a $10 million bank or a $20 million bank. That's both because the banking regulators don't want the strain of failure and because the FDIC guarantees deposits, and so they want a stable institution. But it's also a barrier to entry. A Battle Bank will be a $150 million bank. A bank that has the scale necessary to fund the regulatory burden that's been imposed on us by the banking community. I need to say, I am absolutely unafraid of competition from Bank of America, from Citicorp, from JP Morgan Chase, from HSBC, from the Royal Bank of Canada, from the Bank of America. And by the way, I'm a customer personally of most of those institutions. I would describe my relationship with most of them, and I'm a good banking customer. I would describe my relationship with them as sullen. I hope that people's relationship with Everbank is glowing, is ebullient, as opposed to sullen. The other thing I see right now, Jesse, that's just hugely amusing to me is that the business that I came into business with was oil and gas lending, senior revolving credit facilities in the oil and gas business. It never occurred to me at age 70 that I could come back into that business. That business was owned by RBC, by BMO, by JP Morgan Chase, by Wells Fargo, by Bank of America. But the oil and gas business is politically incorrect. And these guys are backing out of the single best lending business I know. So I look forward to Battle Bank being an eager participant in senior secured revolving credit facilities for the oil and gas and perhaps for the mining business, precisely because the big banks, who by their nature should own this business, are retreating from it voluntarily. I make a joke with my colleagues at Battle Bank that even an old, fat, bald 70-year-old like me could win the 100-yard dash if I'm the only guy in the race. And that seems to be what's happening in oil and gas lending, much to my delight.
In the near future, precious metals set for significant growth, driven by economic policies favoring gold and silver as inflation hedges. How will these evolving dynamics shape your investment strategies, and are you prepared for the shifts in the financial system? Share your thoughts in the comment section below. If you find this video informative, don't forget to show your support towards our channel and turn on notifications to stay informed about our latest videos. See you in the next video.